Yo, what's going on, everybody? It's Nate Be Lit because Nate really does be lit. And we are here at our first YouTube video. Ladies and gents, I didn't know what the hell I was going to start off with. So I said, fuck it, let me just make the video, right? Now, what this video is going to be about today, what I'm going to be doing is basically Forex and freestyle, right? I'm going to go through a few currency pairs with you guys. Um, a lot of these drawings that you're seeing on here are old drawings, so I'm going to be deleting quite a few of them and just starting from scratch. But the dollar index is where I'm going to start. But before we get into that, ladies, gents, boys, and girls, what I'm going to do is start off on Forex Factory, right? So, Forex Factory, as you guys will know, for those of you guys that do trade, Forex Factory is very simply the website that you're going to be using or that, most people use to understand what's going on with, fundamentals going on throughout the week, So to start this week off, I don't actually trade Mondays, so this doesn't really mean that much to me, but I will obviously, have a look at what's going on in regards to that. But we've got German prelim CPI. Coming over to Tuesday, we've got CPI for the Swiss franc. So that will be interesting. It's month for month, so I'm not really, that doesn't really have too much weight on what my directional bias is going to be, moving on into the week. It is Monday today, so I don't trade Mondays. I usually use Mondays as kind of just a day to kind of get the whole week in order, just setting up admin stuff and, making sure that all charts are marked up, making sure that I've, documented any previous trades. I usually get that done the week before, but sometimes if I'm, just having a bit of a disorganized weekend or whatever, I'll usually do that. So Mondays is kind of like my setup day for the week. So I don't usually do too much trading on Mondays, but being honest, not just because there's a lot of manipulation on Mondays, but also because my data tells me that, trading Mondays is not really that profitable. I might catch a little something here and there on a Monday, but if I'm being honest, I haven't traded a Monday in, I couldn't even tell you when the last time I traded Monday was. So I'm about to start now. So yeah, moving on to Tuesday, we've got, like I said, we've got, Swiss franc stuff, the CPI month for month. We've got ISM services, so that'll be interesting to see, how that comes out. Usually, as a general rule of thumb, when the number comes out over 50, it's usually a sign of like it's usually a good sign for the dollar, right? So you've got contraction and obviously you've got, expansion. So, over 50 is usually an expansionary period for that, whatever currency it is when you're seeing PMI. And obviously below that is usually, a contractionary, meaning obviously it's negative for that currency pair. Or for that currency, should I say. Obviously, you've also got JOLTS job openings. So, job openings is quite important when it comes to the macroeconomics. Anyone that I am working with, because I also do, work with a few students one to one as well. I always, make a point to educate them on the fact that, these markets are driven by something. And what is that something? It's the institutions. Now, what constitutes whether the institutions are going to want to buy, up large amounts of currencies or sell large amounts of currencies is going to be dependent on, you know, it's a whole, cascading of events. You've got interest rates, you've got inflation rates, you've got, you know, those two things are usually dependent on whether people have got jobs or whether people haven't got jobs. People haven't got jobs, naturally people are going to spend. If people have got jobs, sorry, people are going to spend more money. And if they haven't got jobs, on a grand scale, people aren't going to be spending as much money. Less money spent, lower inflation, so on and so forth. But if anybody needs help in regards to any of this stuff, maybe you're watching this, maybe you're seeing my video for the first time, you're thinking, yo, who is this? Who is this devilishly handsome, young, smooth skin, dark chocolate, sexy man that they're seeing on their screen? Then obviously feel free to hit me up on Instagram or just leave a comment below and I'll start, making pieces of content in regards to the questions that you guys are asking. But yeah, so that's basically Tuesday wrapped up. So tomorrow, obviously, it's the first week of the year. So we are going to start to see, some volume coming into the markets. When I say volume, I mean money. So that's Tuesday wrapped up. Wednesday, we've got CPI for the Australian dollar year on year. I'm not really interested in trading the Australian dollar as of current, just because there's a whole load of not inconsistencies, there's a whole load of confusion with the Australian central bank. And if there's confusion with the central bank, they don't know what they're doing. They don't know, they don't have this. They don't have a Scooby what's going on. So I'm not going to trade anything that has Australian dollar in it or New Zealand dollar because they're quite tight knit, if you will, right? So I mean, I'll have a look at what's going on with the CPI just to get an idea of what's going on moving forward, But we're at 2.1% right now. If we start to move away from that number, we start to go higher, then that could be bullish for, anything that is driven by Australian dollar. How do you know if something's driven by one currency or another currency? Ah, if you want to know, leave a comment below. Let me know, and I will be more than happy to go through that with you guys as well. As much valuable content as I can put on here, I will put on here. So yeah, you guys ask me whatever questions, and I will be sure to give you guys the answers in excruciatingly painful detail as and where I can, right? So CPI for the Australian dollar, you've got a non-farm employment change for the dollar, which should be kind of interesting. Well, very interesting, should I say. You've got unemployment claims. Again, unemployment and employment are both very, very, very important factors when it comes to, any currency, because that is sort of the backbone of what, macroeconomically what's going to happen with that country, so it's go I'm not going to sit here and say, you have to be, all dialed up with the fundamentals. You can if you want. You don't have to. I do because I want to have an edge in the markets as much as I can, And that's not to say you can't make money without. I was making money without, but I find that my directional bias is a lot more clear and critical when I understand what's going on from a fundamental perspective. So, these pieces of data here will be very important. Your non-employment change, sorry, non-farm employment change, and obviously unemployment claims as well. You've got, some FOMC meetings happening tomorrow. So that will be very, very, very important. Every time Fed Chair Powell speaks, you want to have your ear to the streets. That's what I will be saying, right? And I say that because, again, if there is going to be any signs or signals or clues as to what's going to happen with the economy moving forward in regards to interest rates and so on and so forth, you kind of want to be plugged in with that, right? Thursday is drier than a grandma's, what. So yeah, ain't nothing happening on Thursday. I usually tend to trade Tuesday, Wednesday, Thursday, Friday. So, if there is anything happening on Thursday, that's just because there's no news, it doesn't mean I won't trade it. I'll trade it just, as if I would trade if there was news, but I would be less bothered about timings, in regards to, oh, what time's this coming out? What time's that coming out? Because I know there's nothing taking place on that day. But my trading window is always going to be the same. I will not trade outside of that, even if it's by a minute. I don't care, right? And last but not least, Friday, obviously, start off with the best first. You've not unemployment rate. You've got, NFP, which is usually pretty big on the markets. The previous number was what 227,000 jobs. That was the reading on the last NFP. So if we have anything higher than that, which is forecasting as it's going to be, I don't really put too much weight on the forecast because who's forecasting it? It's numbers. It's all what's the word? Smoke and mirrors until we actually get the numbers come out. So if we do get a lower number, that could be negative for the dollar. So yeah, it'll be interesting. Unemployment rate, of course, again, is going to be interesting as well because again, as I've explained earlier in the video, unemployment rate is going to be something that is going to cascade through, the macroeconomic cycle. So that'll be interesting. Average hourly earnings, we've got that on Friday as well. Unemployment rate for the CAD, for the Canadian dollar. I mean, we already know that Canadian dollar is weak as hell right now. So anything that is being driven by that, where it's on, if it's on the right hand side, should be going up, and obviously vice versa if it's driven by the CAD and it's on the left hand side. So things like USD CAD, for example, we should start to see, well, we should continue to see them going higher because CAD has been weak now for quite a few months. Now we've also got, employment change for the CAD as well, which should be interesting. So altogether throughout this week is a pretty, I mean, I wouldn't say it's the most action-packed, but it is pretty action-packed, And we're going to start to see some volume coming into the market, so it should be interesting. Now, moving on to some chart stuff, shall we? Let's share my screen on here. Here we go. Okay, sick. So obviously, I usually like to start off my analysis with the dollar, just because, it's the world reserve currency. So if you can understand what's going on with the dollar, you can start to understand what's going on with Euro USD, GBP USD, you know. Also, even when it comes to like things like US 30 and stuff like that, there is so if you want me to go into the fundamental side of things, let me know in the comments and I can more than happily do that. But just as a overall synopsis, when the dollar's going higher, you have to understand why that's taking place. And it's because there's a lot of money being pumped into the dollar. And when there's money pumped into the dollar, usually you start to see weakness on, things like US 30, S&P 500, and so on and so forth, because they are baskets of, companies. And if there is a strong dollar, then what does that mean? There's a strong dollar. People are pumping their money into what is called, government bonds, and they're taking their money out of risky assets and putting them into less risky assets, and obviously vice versa. So like, when they say, currents in water, what is that? It's the flow of water, you know. But when you look at currency, it's the flow of money. So you have to understand the flow of money to understand, when it's the right time to be, or when it's an effective time to be invested in certain assets against other assets, and so on and so forth, right? So looking at the dollar, we are starting to see. I mean, let me even start off. Let's go lower, right? And I won't go through all these currency pairs. I'll just run through a few, and obviously we'll call it a day there. But obviously, long term, we are bullish on a monthly standpoint. I usually, well, not usually, I trade something that's called Wyckoff. So anyone that's watching this right now, you've heard of Wyckoff before, you understand, accumulations, distributions, reaccumulations, redistributions, so on and so forth. And these are the four components that make up market cycles. So for a bearish market cycle, what you often find is that you'd see, the bearish market cycle started off with a distribution, followed by a redistribution, followed by a redistribution. And obviously that will continue until obviously price gets, until the institutions have taken price to, the levels that they want to take it to, and then obviously on the bullish side of things, usually a bullish market cycle will start off with an accumulation and be followed through by a reaccumulation, followed by a reaccumulation, followed by a reaccumulation, and so on and so forth until they get to their upwards target. So that makes sense. Now, on a bullish standpoint, we've got what, price order obviously distributed. Obviously, you're not going to see the clear, distributions and redistributions, on from a fractal standpoint on this high time frame, because the small waves are too small to be seen on such a high time frame, right? But you would have seen, we can see that we've distributed up here, prices accumulated, made its way higher, distributed, prices come back lower, made a new low. Upon making a new low, obviously over here, we've done something called sought and destroyed, or seek and destroyed. And this is the only two things that the market wants to do: seek and destroy and rebalance price. So now that we've just sought and destroyed the previous low, usually what do we see? A retracement to rebalance price, so that they can obviously bring price up to an attractive enough price so that institutions can start, selling off. Because again, what is economics? What is one of the key golden rules in economics? You buy low and you sell high, right? So they push price high enough to where it's attractive enough for them to want to buy it, sell it, sorry. And then obviously if we're going to continue being bearish, we should start to see, some bearish momentum. Now, what I often tend to do when it comes to a charts perspective is I will line up the fundamentals with the technicals, and the fundamentals will usually give me my directional bias, and the technicals will tell me when and where I should be getting into these trades, and that's how we catch, the one to tens, 1 to 20s, 1 to 30s, one to so on and so forth. Recently, as of what, I think 3 months ago, I'm now an honorary member of the 1 to 100 society as well. Yeah, so obviously, so yeah, and this is how we've been able to do it. So again, going back into, I just remove all of this stuff out of the way for a minute. What we again can start to see is that we've distributed up here, obviously made, our leg lower, redistributed, prices come lower, obviously accumulating to bring price up, so we could potentially have a distribution up here to potentially bring price lower and take out these lows down here. And again, Trump is coming into office, which is something that I'm very, very excited for. this year. Obviously, he's been elected, but he hasn't come into office just yet. He comes into office on the 20th, if I'm not mistaken, 20th of this month. So, Trump being a businessman, he's going to do what's good for business, right? And if businesses are moving higher, that means stocks and so on and so forth are also going to be moving higher, meaning that we should tend to see the dollar make its way lower, right? And if that's the case, we're in a pretty good area right now. We're if this is the high of the previous redistribution, we're coming into pretty high areas of supply right now, and this is where I'm expecting to see some downwards momentum, if you will. So, as I come down on to a lower time frame, what can we start to see? So we've got, our so I want to make this as simple as possible for you guys to understand. I know this is my first video, so we're going to go into this stuff in depth over time. And, we're going to be sharing a lot of I'm be sharing a lot of value with you guys, not just trading stuff, but just life stuff. People say to me all the time, like, oh, they refer to me as, oh, a trader or whatever. I would say to people, I'm not a trader. I am a gentleman, a young, handsome gentleman who trades, same way as I'm not a perfume guy. I'm also a perfume company owner. That doesn't mean doesn't make me a perfume guy. I don't like the idea of being boxed off into, just one thing. Oh, he's this guy, he's that guy. I take a lot of different forms. I'm also a father as well. I'm also a a very proficient gym man. Yeah. By the way, I'm taking on what's the word? I'm taking on new applicants for my gym partner as well, ladies and gents. So, well, maybe not ladies, because yeah, I want a young, what's it called? I want a young, strong gent. So do you know what? Do you know what I do want, right? I'm going off topic here, but I want someone that is stronger than me so that I'm like, yo, I need to catch up to my man. Do you know what I mean? That's what I want. But anyway, going back to what I was saying earlier, right? So right now we're at a higher time frame supply to the left of us. Again, I can zoom. Oh, what kind of arrow is that? Yeah, so I can come on back over to higher time frame for a minute. We are in supply right now, and institutions will sell at supply because it's high. Again, you want to sell high and buy low. So we're pretty high up right now. And if we come down to daily time frame now, what have we done? Again, the same thing I was just speaking to you guys about earlier in regards to the whole Wyckoff, um, not terminology. What's the word I was looking for? The whole Wyckoff principles and the Wyckoff standpoint. We've accumulated, we've had a massive accumulation. Well, actually, even if I just zoom in a little bit, right? What have we got? Accumulated. We can just look at this for now. We've accumulated. What do? We then reaccumulated, took out this high, and obviously we're seeing a series of reaccumulations, and obviously we had that high, price has broken a previous reaccumulation, and obviously now we've that technically means we're potentially inside of a beginning of a bearish market cycle, because what do? We have distribution. The way I like to look at it is when a reaccumulation it's broken inside of my supply zone, my higher time frame supply zone, I usually tend to look at that as a distribution, right? So if we just distributed, we accumulate to come higher. I'm anticipating seeing price potentially, giving us a distribution here with the intention of seeking and destroying these lows down here. So if that's the case, well, technically not these lows, technically these lows, that's the lowest point, right? So again, now that we're making our way lower, well, now that I've got my overall, higher time frame bias and I'm anticipating price coming lower based off of the fundamental perspective, the whole fact that Trump's coming in office and he's a businessman, of course. I think he's even said as well, I was reading something a little while back, and he basically was veering towards the idea that, he wanted to devalue the dollar. And if the value of the dollar is devalued, we should start to see the DXY come lower. So we've got quite a few reasons for us to be, anticipating sales. That doesn't mean I can't be wrong, because in these markets, my job is to anticipate the direction of the markets correctly. However, we're not always going to be right, and I'm happy to be wrong because I know and I've looked at my data and my documentation over the past couple of years. And there are a lot of times, there are many times, and most of the time actually, where I'll be majoritively wrong, but I'll still end the month in profit. I'll still end the week in profit. Do you see what I'm saying? I'll still end my sample size, in profit. So what does that mean? That means that we don't necessarily have to be right all the time in order to make money, So I'm happy to be wrong with this, if I'm being completely honest with you. But if I'm going where all of the data is pointing me, it's pointing me towards being more bearish. So I ideally I'm anticipating price to start showing me signs that sellers are starting to come in. And what is that sign? A distribution, you know. So if anyone hasn't seen or heard of Wyckoff before, I will be making some more videos in regards to that as well. I've even got a little presentation that I can run you guys through as well. That will just break down, how basically how Wyckoff works, right? So right now, I'm still, on a lower time frame. I'm still technically, I'm in a bullish market cycle, so I'm still looking for buys. If price does make its way down here. Oh, Jesus, what am I doing? Price does make its way down here, you know, and starts to come in here and starts to show signs on the lower time frame that buyers are coming into the markets, then by all means, I will take buyers off of this and obviously be targeting, these highs up here. So for me right now, I'm kind of just waiting to see what's gonna happen, you don't always one thing that I learned, you know, later into my time with trading is that, you know, you don't always have to be in the market. You don't always have to be in a trade. It's a fallacy that, the more trade you take, the more money you make, or that you always need to be in a trade. It's just not true. When this is not a 9 to 5, So obviously right now I'm happy to wait. So I just simply just set my limit here and I will wait to see what takes place. And if price continues to come lower and doesn't break through this, right? Sorry, if it doesn't accumulate here and go higher and it ends up breaking through this, well, then I will start to wait to see if we're going to start to get a bearish market cycle play out. What do I mean by that? If we have a distribution over here, if price does end up distributing, then I'm going to want to see price continue the bearish market cycle by doing what? Creating a redistribution. So that's basically my plan in place right now. If I'm being honest, I want to see what price is going to do at this point. If price does come in here and shows evidence that buyers are coming in, I'll continue with my bias until I'm basically told by the markets to do otherwise. But right now I'm not being told that. We're in the bullish market cycle on a lower time frame. On a higher time frame, yes, we may, we are bearish, higher time frame. But right now, I'm not taking entries off the higher time frame. I'd use the higher time frame to give me a directional bias, and then I scale down onto lower time frames and lower time frames to give me more insight into where I should be looking to sell long term. And if we're not there, then I potentially can start looking for buys up until that point to where we start to come into supply and we start to see sellers coming in. Then obviously I would stop. I immediately stop looking for those buy positions because I can see, proof of or evidence that sellers are starting to come in. So if I'm going a bit too fast for anybody, again, like I said, I'm going to be going through a whole load of content over this next, however long. I'm going to be going through some serious stuff with you guys, not just trading stuff, because I'm not like, again, I'm not just a trader. I want to show how, what's going on in life, like it's been this past year has been crazy. Traveled to like quite a few countries, brought my daughter along with me, my wife along with me. It's been lit. Do you know what I mean? And 2025 is going to be even lit. So we're gonna keep running it up. But yeah, so I hope that makes sense to everybody that's been following me in regards to the DXY. Now that I've looked at the DXY and I understand what my directional bias is in regards to the DXY, I could then translate that down to Euro USD and GBP USD. And these two currency pairs are diametrically opposed to the dollar index. So when the dollar index is going higher, Euro USD and GBP USD should tend to, be doing the opposite, which is obviously coming lower. So where may I find Euro USD? Euro USD. I'm going to do it on a different data feed. I usually use So I usually use FXCM. That's why I usually mark up my charts. But for this example, I'm gonna do it on Oanda just so I can start from scratch. So that's why I delete everything. I was doing a lot of back testing on here, so that's why you can see my previous back testing stuff. But you know, coming down to well, go if I start, I can even start on the weekly really. Start off on the weekly, I can see that we're bearish on this on a higher time frame. Yes. Now, again, we were bearish on the dollar long term. So that means I'm looking long term to see this start to make its way higher. So if that's the case, if we remember what the dollar index was doing, it was setting up to potentially distribute. So for me, I'm looking at the complete opposite, if you will. So if I just come back to, let me go to come to the monthly real quick. Okay, no, never mind. Sick. So yeah, what I'm going to be looking at now is I want to start to see if we can, start to see evidence of buyers coming in. So we're not currently seeing that as we're not seeing it as of current. But if I just come over to this real quick, let's do this. So we go DXY on the right hand side, and obviously we can look at dollar index on the left hand side. So obviously, what do we see on the dollar? If we start off up here, in fact, what I'm going to do is I'm going to flip this upside down, just so they look, if so it makes sense to you guys as well. So they're both technically right now in going in the same direction, just for just so you guys can make sense of it on your side, right? So with this now, what I'm looking at is what I'm looking to see, because now that we've broken this previous reaccumulation down here, this is literally the same thing. We broke this reaccumulation, well, redistribution on Euro USD, obviously on dollar index, and now I've flipped it over, so it might be a little bit confusing. But on the dollar index, we obviously saw that the previous reaccumulation, the reaccumulation got broken, right? So obviously now, if I'm looking at the same thing on here, what I can then see is what, if we've just broken that, we've just broken this. I'm looking for the same thing. So right now, I want to see what price does when it eventually makes its way in here. So if I just flip the dollar index back over for a minute, it's starting to make sense. We broke this previous reaccumulation over here. We broke the previous redistribution. And obviously, it looks like we potentially could be having, the start of a reaccumulation to send price higher, where we've got the distribution, price makes its way back in here. If we can start to see evidence of buyers coming in at the same time as sellers coming in here, then obviously I'll be looking to take some buyers out of here, and these buyers are going to be astronomical, right? Obviously, my main targets will be obviously depending on where I'm entering on the lower time frame. But if we're looking to really hold these things out, you could be at least minimum targeting these highs, which would be some crazy risk to rewards. That's where you catch your, that's where you catch your 1 to 100 plus, So yeah, if I just go back to full screen very quickly. So this is what I'm looking at right now. I want to start to see if we can see evidence of buyers coming in on Euro USD, and obviously sellers coming in on the dollar index. And if we do, then this will be pretty damn juicy. And because obviously higher time frame, if I, I'm gonna quickly come back onto here again and just show you guys on the higher time frame. If we're looking at the dollar index, potentially, what have we done? We had, bring my pen up, had a reaccumulation, a redistribution. Price obviously broke the previous low, and we've started to accumulate now. Price makes its way back up. We start to distribute now out of previous redistribution. Then technically, what that means is what? We should start to see, if we're going to continue to be bearish on the dollar, then we should tend to see this low get broken, which means on Euro USD now, if I just come back on here, that means that we should start to see a lot of a very, very big move to the upside. potentially even taking out, you know, these highs, these highs, these highs. Do you see what I'm saying? You know, these highs. I wish I could see more data on this, to be honest, but I don't think they don't give you that any more data in regards to that. So interesting. But yeah, so this could be a very, very, very substantial move if we can catch it correctly. And even if you don't catch, the lowest move, it doesn't matter. I always like to give the analogy of, a train. If you're going via train to go and meet, let's say for the guys that are watching this right now, let's say you're going to meet the mandem, and everyone's linking up. It's about to be a vibe. It's about to be lit, you know, and you're waiting for your train, or you're going to the train station and you miss it. You ain't gonna throw the whole evening away. Do you know what I mean? What are you gonna do? You're gonna you're gonna wait for the next train. Simple as that. So, if price does start to show evidence of buyers coming in here, and price starts to make its way higher, again, what constitutes a bullish market cycle? You have an accumulation followed by a reaccumulation. And what is a reaccumulation? It's just the institutions re-adding buy orders into the markets. And obviously, potentially, we could see those, get mitigated. No, once obviously the reaccumulation is being complete. And what is the reaccumulation? Well, we know that it's them re-adding orders, but how does it actually work? You have to remember the institutions, they don't just buy, they have to sell to buy. Why? Because they have to hedge themselves into the markets. Why? Because their aim is to do what? You want to buy low and you want to sell high. If the market is already high and they want to buy low, they have to bring the markets lower. They are the institutions, they are the entities that have the power to do this. Why? Because they have the most money. This is a $7.5 trillion per day industry. I believe it's 7.5. It could be a little bit lower, but I believe it's 7.5 at the moment, right? So $7.5 trillion industry, and these institutions are the ones moving these markets. So they can do whatever the hell they want. I was about to say a swear word right there. You could probably you could probably guess it, but they could do whatever the hell they want. So they're not going to play the game to lose. They're going to play the game so that they make maximum profit and that they don't lose. So what they would do is they do what? They sell the market down to bring price low enough that it's attractive for them to buy. And then what do? They start adding buy orders into the markets to send price higher. Meanwhile, they're selling in here to bring price lower. They're in profit right now on the sell side. Then they do what? They start adding their buys in. So now, as price starts to make its way higher, the buys from in here are what? They're in profit right now as price is starting to make its way higher. But the sells from up here are the profit is slowly starting to dissipate into zero. And obviously now they're in drawdown. The sells are in drawdown, but their buyers are in profit. So what do? They don't play the game to lose. So what do? They bring price back down to mitigate any previous, losing, well, in drawdown sell orders. They close them, and when sell orders get closed, that only leaves pressure for what? It's buy pressure. Because when a sell gets closed, those sells are turned into what? Buys. So when that takes place, we tend to see price react from these areas, and that is what is called mitigation. So again, going back to what I was saying earlier, if we do start to see down here we accumulate, I'll just be simply waiting for a reaccumulation, and I will enter my trade based off of that and ride the train back up. You see what I'm saying? So I hope that makes sense to you guys. So this is Euro USD in a nutshell. So moving on to GBP USD. I would have liked to go through some more charts, but I do need to make a move in a minute because I'm going out shortly. And I need to have a shower and I need to get myself all nice and pretty. I'm joking, I'm not nice and pretty. I need to get myself nice and handsome, should I say? Right? So I'll finish off on GBP USD, and then what I'll be doing, you know, down the line is just basically just doing the same thing, just adding more and more and more and more value. So if you guys, enjoy content like this, then I'll continue bringing this to you guys. If you want to see something different, let me know. I'm gonna mix up a whole bunch of shit. So yeah, you guys are gonna be in for a treat. But yeah, again, going back to this now, very similar thing to Euro USD, and obviously the opposite of DXY. So oops, what's going on here? So if we just go down to a lower time frame for a minute, it's literally just the same thing. What do? We know that, we're anticipating DXY to start making its way lower. So that means I'm anticipating, GBP USD start making its way higher. So if we look at, what was happening before, obviously higher time frame, we are in a bearish market cycle. However, again, if we just split the screen up real quick, I'll just delete all the drawings that are on here for a minute, apart from what I just on earlier with the fib. So, cool. So now, obviously, what's going on here? I'll just zoom out very quickly. We broke that previous reaccumulation. So obviously we could be starting off, starting to create a bearish market cycle. So as I zoom into this right now, if I move my face over to this side real quick, what did we do? We did the same thing. Broke that previous redistribution down here, or up here, should I say. We've broken that now. So essentially, we've now broken the bullish markets, the bearish market cycle, meaning that buyers are definitely, they're definitely coming into the markets. But now what I want to see is what? I want to see evidence of, of a reaccumulation of price of the institutions trying to re-add more buy orders into the markets. So now, what do I want to see? I want to see, there's my pen. If I just do this. So I want to see, price start to add their sell orders. It will start closing their previous buy orders that were in profit, leading to sell pressure coming into the markets. I want to see price make its way down here. And at the same time, I know that this is lagging behind a little bit because obviously the dollar index is pretty close to the 50%, but the pound GBP USD isn't as of current, So can we, that doesn't, I mean, that doesn't mean, for example, that if we start to see price sellers showing up here for the DXY, that doesn't mean that, that doesn't mean that if they start to show these selling orders, that if the dollar, if GBP USD is here, for example, and starts to show the buy orders, I will still enter based off of the fact that the dollar index is starting to distribute. So, in an ideal world, would I like to see price come to the 50% and give it cleaner? 100%. But the market doesn't give a shit what I want. Do you know what I mean? So we've got to play what we see. So, I want to see something pretty similar. Price can make its way down or start to show signs of buyers coming in at the same time as, DXY starting to show signs of sellers coming in, then amazing. I will look to start taking buyers off of this. What you guys will do well to do is follow me on Instagram as well, because I post all of my, well, not all of, but I post quite a fair amount of my entries on my Instagram, trades that I've caught. So you guys will see, the 1 to 10s, whether it's in this country, where I've been in this country, where I've been in another country. I was in Dubai, what, not last year, the year before, in a 1 to like 15 risk to reward on Euro USD, not Euro USD, Euro NZD, sorry, right? And all of that's on my Instagram. I caught a one, bro. This that fairly recently. I'm talking like 3 weeks ago or so, 2 weeks ago, just before Christmas. I was in a one to, it was a 1 to 19 or 1 to 18 on Euro USD. All of that stuff is on there, and I usually update my Instagram, you know, with these trades as well. And if you guys want any of my case studies on any of these trades, feel free to send me a DM on Instagram or put a comment below, and I can go through one of my case studies or a few of my case studies, whatever you guys want to see. All I want to do is just be tall, dark, and and sexy smelling, and add you guys and add some value to you guys wherever I can. So let me know what you guys want to see, and I will definitely make sure that happens. Whether it's in regards to trading content, whether it's in terms of like, what I do on a day to day to run my businesses, day in the life, whatever. Let me know, and I'll make that happen. Um, and travel stuff as well. Yeah, so it's going to be lit. But yeah, again, just to round up on these few pairs that I've been through, I would have loved to spend some more time with you guys, but I'm cutting it fine. And you know what they say about black man timing. So yeah, but yeah, man. Nah, for real, it's been a lit first YouTube video, actually. I'll be lying to you if I said that I didn't spend a little bit of time, thinking, shit, what am I gonna say? How am I gonna do this? Da, 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 da. But I just said, let me flow, let me freestyle, like how I do best, and see what happens. So again, game plan for Euro USD, GBP USD, and the dollar index. I just want to see, buyers start to come in on here. Show me some evidence that the seller, I want to see some sellers start to come in on a DXY. How I'm going to play these is I'm going to base what I'm doing on Euro USD and GBP USD on what the dollar index is doing. So if the dollar index is not showing signs of sellers, I'm not going to be buying this. I don't care where it is. Yeah. Because again, these are both driven by the dollar. If you want to understand how to identify what's driving the currency pair. Again, let me know in the comments. Let me know whatever you guys want. I'm yours. Yeah, I'm here for you guys, right? And I'm here for me as well because I enjoy like going through this stuff, So but you let me know what you guys want to see, and I'll definitely make that happen, like I've said a few times. So yeah, like I say, game plan on this. I want to see. Where's the arrow on this thing again? It is here. So yeah, I want to start to see, price show evidence of buyers coming in. It'll look like an accumulation. And obviously I'll enter based off that only if the dollar index is obviously distributing, right? So on the dollar index, I've gone the DXY very quickly one more time. Oh, no, definitely not the DX. DXY. So yeah, inside of here, what I would like to see is I would like to see a distribution start to form on the lower time frame, right? When I say lower, potentially intraday really. Um, but yeah, I want to see price come up in here and start to give me evidence of price wanting to distribute up here. But because we're still not inside of this area on here, what we can start to see is what in this bullish market cycle we've just previously reaccumulated. So if we come in here and start to show evidence of bias to send us up to that sell area that I'm looking to sell from, then by all means, I'll look to take an entry inside of here. Going back to Euro USD, on Euro USD, because I'm potentially looking for bias. If I can look inside of here now, I'll look inside of here, and I'll also have a look inside of here to see on the lower time frame, like 5 minute, 3 minute, 1 minute, if we can start to see some evidence of sellers coming in on here. I mean, we potentially could be starting to see it already. If you want to know how to validate, how we validate this stuff as well, I can go through some videos in regards to that as well. And yeah, man, we can do a lot of that stuff as well. But yeah, we start to see sellers coming in on here. I'll just zoom out very quickly. We just zoom out. If we start to see sellers coming in here, then I'll be more than happy to, take entries based off of this if it gives me a 1 to 10 down to these lows. I only take 1 to 10s and above. I don't look at 1 to 5s, don't care about 1 to 4s. I used to be the guy really getting excited about 1 to 3s and 1 to 4s, not knowing that, some of my friends, people that I've even learned from myself, shout out to, Master of Coin on YouTube as well. If you know who he is, guy's a beast, bro. And that's bro. So, and I've learned an awful lot from him as well. Shout out Pips of Persia as well. That's also on YouTube as well. And I learned a lot from those guys. Who else have I learned a lot from? Like maybe not from a technical standpoint, but like profit taking stuff and stuff like that. There's a guy called Urimi that you guys may have heard of before as well. I don't learn directly from him, but I take a, I've watched a few of his videos and I understand, you know what I mean? I'm a student to this game, I'm a student to the game, and these guys are all killing it. Obviously, I'm doing all right myself, but there's always another level to go to, ladies and gents, So, I learned a lot from all of these people, um I've looked at WW, is it WWA, their stuff as well. Again, I don't learn directly from them, but I've taken, do you know what I mean? Like there's a saying that goes like this: if I'm to be, if I'm to be great, or if I'm great, it's because I stood on the shoulders of giants, and that's exactly what I intend to do. Continue standing on the shoulders of these giants and learn as much as I can. I'm a student to the game, like I said earlier. So, inside of here, Euro USD, if I start to see some sellers coming inside of here, then I'll get in based off that. Right, this is a 1 to 10. If not, and price wants to continue a little higher, that's also good as well, because the higher it goes, the better the risk to reward down to these lows as well, which is, you know, which is lit. You know, I hope price comes up higher, but if I start to see sellers coming on here, then by all means, I will look to take some sells in regards to that, and then obviously just lower time frame stuff. Going back on GBP USD real quick, GBP USD on here again, very similar picture. Very similar picture. Obviously, this is broken, so I'll be more looking at, price coming a bit higher up into the 50. Obviously, Euro USD hadn't broken, sorry. So, I'm fine to look at those areas. But this one here has broken. So, I don't really care about what's going on inside of here. I want to see price coming a bit higher and obviously show signs of sellers coming in. And then obviously from there, I will take those trades accordingly. But like I said, you guys can follow me, see what I'm doing on the markets as well, this week and obviously weeks moving forward. And yeah, man, that is about it from me. So I appreciate you guys, watching. Make sure to like, make sure to comment, make sure to subscribe. That sounds so weird, me saying that the first time, because this is my first YouTube video ever. So yeah, make sure to like, comment, subscribe, and hit me with anything that you guys want. Follow me on the ground as well. And yeah, man, we can get lit. Anyone that wants to work with me directly, because I don't have a course, but I do teach, I do help my students and teach one-to-one. So yeah, I always find that for me, the people that I've spoken to, that I've worked with, they always prefer the one-to-one over anything else. Because with a course, you can go through the course, but that doesn't necessarily mean that you're going to understand what's going on in said course. And if there's no freedom to ask questions as much as you like, sometimes people don't get the most out of it. So, anything that you guys need in regards to that as well, feel free to follow me on Instagram and DM me. I only have one account, it's Nate B Lit underscore. I repeat, it's Nate B Lit underscore. And I've repeated it because over in 2024, I don't know how many fake accounts were made of my Instagram. It was wild, bro. Like I even bumped into some of my guys that like have my phone number. Like, yo, bro, why are you sending me this trading thing? I was like, bro, this is not me, bro. Do you know what I mean? So it's Nate Be Lit underscore. If it's Nate underscore some whatever, no, it's not me, right? Nate Be Lit underscore is my only Instagram. So yeah, man, make sure to follow me. Make sure to comment, like, subscribe, as I said, and I'll see you guys very, very soon. And remember to keep your head on that bread. Peace.